And I mean, it's really looking quite decent, guys. We've got this area in here, which is the point of inflection back from the highs there on the 3rd of April. If we can get a breakdown below there, I'm thinking a short is certainly going to be on the table. Now, can anybody tell me, just from looking at this piece of price action in front of us, right? Good afternoon, everybody. Welcome, ladies and gentlemen, to this afternoon's Markets Now session. It is the 12th of November today. Dark grey, as it always is in the UK at the moment, as we get into the wetter seasons. But we've still got smiles on our faces here, apart from, obviously, the latest news on this week's CPI event, which I think everyone can join me in taking a moment to just be really gutted about, because that was the main highlight of the week. But the US government shutdown has again struck a chord with our markets, and yeah, it's removed the highlight of the week, unfortunately. So there will be no CPI trading event this week, as the data is yet again delayed. So now we are awaiting the non-farm payroll numbers and the US CPI numbers as well. Good afternoon to everybody in the trading community at the moment. Hope you guys are all doing well out there, having a good day today. Great to see you. Nice busy turnout as well, which is always good. And good afternoon to everybody on the YouTube side of things as well. Hope you guys are having a good trading week so far and things are going well for you out there. Remember, if you haven't done so already, you can join everybody on the inside of the trading community for these weekly market recon sessions. It is utterly free. There are no strings attached, so please feel free to come and join in the action. Good afternoon, Scotty D. Hey, Matthew. Hey, Ali. Good afternoon to you, sir. Scotty D says, think they are meant to be voting to end the shutdown today, I think, so we will see. Fingers crossed for that, mate. Fingers crossed for that. Absolutely. I think we need to see the end of the bloody thing, don't we? I was just saying earlier on, I was having a chat with a buddy of mine in the city, just saying, I mean, in the last 15 years, never seen anything like it. Never seen anything like it. So I think the end of it is certainly due. So it's going to be a predominantly US Open focused session this afternoon. We personally, i.e. the UTC traders specifically, who are catching up with us on a daily basis here at the UTC, we have a great deal of positions at market at the moment. We don't have any real level of exposure out there in the markets, but we do have a lot of pending and limit orders getting ready to be set up. I can certainly go through those. We will be going through those, doing a bit of housekeeping. And as a, well, not as a gesture of anything really, but what we'll do is we'll go through and we'll do the housekeeping, and I will roll off the orders that we've got out there so far. If they haven't triggered, then those of you who are here to catch up on a Wednesday are welcome to join in the fun. You can follow along either in demo accounts, or you can stick some risk at the market. Remember, we do not risk any more than 0.25% of our account balance per trade. Any increase of that number and you are well on your own. And just don't be silly. Be responsible. Remember, we are here to protect our capital at all costs. Okay? So the reason we risk 0.25% is the fact that we're always aiming for a very nice, balanced and positive risk reward yield. So even though we're only risking 0.25%, we are always having 2x or even 3x the return on our investment. So we're still looking at a very positive return after that. So what we'll do, as I mentioned, we'll go through, look at the order book, what we've got going on so far in the UTCF, work out what orders haven't been triggered yet, see if they're still valid. If they are still valid, we can talk about them. I'll throw them out there to everybody, and then we can sort of break down the US indices, see where our trading activity is going to be taking place this afternoon. Just an FYI, US indices yesterday were completely terrible. I was initially going to not trade it at all. Scotty D, although I'm not going to name names, told me I should because there'd still be some action. There wasn't, and I took a loss in the S&P, so that one's entirely down to Scotty D. So thanks, mate. Round of applause for you. But yeah, it was awful. Oh, that's all right then. That's all right then. Yeah. Good afternoon to you, Nadia. Good to see you. Hey, V as well. Good to see you, buddy. Hey, Corton. Good afternoon. So that's what we'll start with. Scotty D says I had a long position planned in Dow, but had to go out and missed it. Yeah, do you know what? The Dow was actually all right, wasn't it? We were talking about which of the three were looking good, and the S&P at the point we were assessing the markets definitely looked like it had the best availability, but the Dow Jones actually did very well. It did really well. Yeah, it shot up quite nicely. So yeah, it was a bit of a shame there. I dropped the ball on the Dow yesterday because it usually is my go-to. I wouldn't usually tend to focus on the Standard & Poor's index. But yeah, it is what it is. It is what it is. Right, let's focus on the top of the FX. Actually, no, let's focus on the bottom of the FX market. We'll work our way up from there. We'll have a look at what's going on so far. So overnight, ladies and gents, we did take a slight hit in the USD Swiss. Even though the trade didn't look like it triggered on the trading view, I actually got knocked into this one on the overnight rollover, and then it came down to stop out. I actually had a message, and we've got Jack in the room. Is Jack in the room this afternoon? Yes, we got Jack in the room. I did have a message from Jack suggesting the same thing happened to him as well as in the Euro NZD, which is unfortunate. But this one, yeah, it did take me in on the spread overnight on the rollover, and then took me out this morning at about 7 a.m. So that was a little bit of a shame on that USD Swiss opportunity. Not that it's actually done very well thereafter either. We have just simply gone basically nowhere. You look at this on a 15 minutes, consolidate it a little bit. We are still well within the liquidity point here at the moment, building for the next leg, whether that be to the upside or downside. I don't really want to be having a second attempt at this one at the moment. The margins aren't there anymore for me. The availability certainly not there, and with the lack of this week's CPI, I just don't think we're going to get the kind of volatility we need to shake the market up and move that sentiment. So I'm going to give that USD Swiss a miss for now. So we did have open position on the, or not open position, sorry. We had a pending order via the BCR entry format on cable yesterday. From this point on, cable has had a big rejection from that breaker structure point. It's actually done a really nice arcing maneuver as well, which we sometimes see at the directional change of a trend. So this is where we suddenly start to see lower lows and lower highs be formed at the end of a bullish run. As we can see here, we've had this really nice retest, which is the bullish run on the 15-minute time frame. We've come back to successfully retest this point of liquidity. And on the daily time frame, let's just consolidate this a little bit, give you guys a little bit clearer context. This is looking like a sweet BCR continuation. It really is. And I mean, it's really looking quite decent, guys. We've got this area in here, which is the point of inflection back from the highs there on the 3rd of April. If we can get a breakdown below there, I'm thinking a short is certainly going to be on the table. Now, can anybody tell me, just from looking at this piece of price action in front of us, right? This area, this low here, is seriously a key point to watch out for and would make a really good target profit. Anybody tell me why? This is not a trick question, by the way. I just want you to suck eggs here, basically. For those of you who know, you'll know straight away. But it would really benefit the other members in the room at the moment who may not know. But this is a great area for a TP. Scotty D, nailed it, mate. Yes, exactly, because it perfectly lines up with the structure to the left-hand side. So if you look at this low and you follow your eyes left, we can see that it is also at another point of an inflection point to the left-hand side as well. So that is also a really superb trading margin. Now, if we go down to the 15-minute time frame, we have, I would say, what looks like an identical margin to the long on the low as well. So what we could now look to do is build in a breaker structure trading opportunity below here, targeting at around the 130.20 point, with a stop loss at around maybe around 131, maybe just above 131. Let's think about this. Let's look left. We've got that area in there, and we've got this area in here as well. So those two lows in there, quite a prominent point. If we drag that across, we've got our stop loss there at 131.03. That's going to be incorporating both the breaker structure and that low point there as well on the 15-minute time frame, which is quite a significant point of inflection itself, and certainly something we want to try and include in our stop loss if possible. So what I'm going to do, I really like this. That is going to be a fresh trading opportunity. So I'm going to shout that out to everybody here. We're going to create a blue for split opportunities on that, and we will upload that. I'll also upload this in the general chat after the session is completed this afternoon as well. So there's that one. But yeah, not too bad at all on that. And then this area in the middle here is essentially acting as a really nice big wide no man's land. So we're not going to be running the risk of getting trapped in any trades in the middle, which is ultimately where a lot of people will go to burn money. Right, let's move our way. Let's move on up to the Euro USD. Now, yesterday, we had Kelvin bring Euro USD to our attention for a potential long following a price action pullback. I completely agreed after carrying out some analysis in this one as well, looking for the potential of a rejection from 115.80. As it happens, we've actually broken through the other side of it now, and we've also broken through some other points of liquidity on the way down as well. Now, the DXY is currently trading at 99.66, which is actually a little bit surprising. I was really on the side of DXY selling off further. I was expecting the dollar index to be down at around 98.80 by the end of tomorrow. So excellent, good news. Yep, that's no problem at all, Coritin. Yeah, good man. So I was really expecting the US dollar to be trading, sort of I would say today southwards of 99.14, but maybe for the continuation to take place down to around that 98.80 area. But we've had a rejection. We've had actually a bounce from this point of inflection here to really fall in line with trend continuation parameters, right? We've got the lower limit here. We have the ascending level up there. And this is a really nice bullish wave that the DXY is still very much respecting. It's still very much within. So I think with the Euro USD trading opportunity at the moment, with the dollar potentially on the verge of starting to gain again, we're going to be looking at this one continuing to trade to the downside. So what I would be thinking here is, what are the margins like for a short? Now, we can all see we've got a floor in here at the moment. We do have this area in here to contend with, which is a pretty significant TRF. Beginning of the price action pullback, we've also got a hell of a lot of lows, which come down into this area here. So we have a lot of commercial interest taking place at around that 1550 to 1554 area. The problem is, guys, where we're trading at the moment, we don't have the space. We don't have the room to maneuver here. This is too tight a margin for us. The real trading opportunity would have taken place either here at about 1 o'clock in the morning. Stops, arguably we would have been stopped out on this one already had we taken that trade. The secondary opportunity, or today's realistic trading opportunity, would have taken place around 115.77. We've come back for a retest. We're on the bump now. I'm just not really feeling the short. It doesn't make complete sense. So I'm going to have to, at this stage, step away from the euro dollar, and we'll potentially come back to that one maybe tomorrow. But right now, it's not ready to go for me. Now, over at the Euro NZD, this is a pending order trade. Now, I know that Jack had an issue with this one. He actually got tagged on the rollover on this one. Mine did not on this particular trade. USD Swiss was the only one I got tagged in overnight. It does go. I want to make a point of this, though, that if you are finding a pattern of being tagged in positions when your entry isn't really near your target, and on the overnight rollovers when the spreads widen, just don't do it. Exit the pending order, close the pending order down at the end of your trading day. Next morning, if the trade is still, let's say for example, like this Euro NZD, we're trading at 2044, then you can reapply the pending order for the next following cycle. If it still fails to trigger, then repeat this. It's an extra layer of security. You're trying to protect your account, you're trying to protect your capital, and it's a sure way of doing it by removing the pendings and the limit orders that you have at market on the overnight. So just something to bear in mind. If you haven't got tagged into it, then that should be still pending. Like mine is, it's still sat in the market, ready to go. And for those of you who potentially did not already know about the Euro NZD, you've joined in for today, for the Wednesday open public session, then please feel free to have a stab at it. But heed my warning. One of our members, and he's not the only one, even myself included, got tagged into trades overnight that never actually hit the dedicated entry we had in market. This does happen. It's part of trading, but you can eliminate that risk just by adding in that extra layer of administration at the end of the day. So you take the trade away and then you reapply it the next day when you wake up. All right. I will take a fresh screenshot of this one. I know for those of you who are UTC traders or investors here, you won't need to see this again, but this is for you guys out there that are not. So there you go. Now, moving on, we've got the Aussie Yen, which is next up, but I'm actually going to have a quick stop off at the Euro Oz. And the Euro Oz, the reason I'm doing this is because the Asia session actually saw quite a decline. We're now trading at 176.99. And I'm starting to get a bit interested in this one. This area in here is interesting. We have the second layer, which is the beginning of the inflection point here, which means that this area just above could then certainly be utilized as, you probably guessed it already, a breaker structure point for an entry into a long. Now, if we go into the daily time frame on this Euro Oz, let's consolidate things for a moment. We will, or should all, be relatively pleased that the market never made its way up to the range highs. So we have the range ceiling, the 1, 2, 3, and that's trading at around 80.76. And we have the lows, and the lows down here currently at around 76.68. Now, based on this, we've had the bump up away from the lower liquidity. We've come back down, which looks like it wants to retest something in here. And this actually happens quite a lot. Now, there'll be times frequently where I am saying to you, okay, the market's already gone. Let's pretend hypothetically there'll be a lot of trading opportunities when I see this kind of price action, and we'll be trading at, let's say 178.30 or something. And I will say to my guys, the UTC traders, I'll be like, okay, listen, the market's already gone away. The breaker structure was down here, but I don't really want to be getting into the market up there. We're too far into the move now. But what I want to wait for is the price action retest of this area, and then we get the continuation, almost like a second wind. So this is what I'm anticipating is going to take place this time around as well. I expect the market's coming down here, taking a little bit of a rest, and then we're going to get that second wind, which is going to be the continuation back up to 180.75. Now, we're talking about a few hundred pip trade. This is a big monster trade, and I'm not really in the realm of wanting to leave a position open that long, especially when I'm not with you guys every day. For the UTC traders, maybe, but especially not you guys that I don't have the ability to be able to assist you on a daily basis. So what I would like to do is actually shorten this down, create that intraday trading opportunity, which is this one in here that I've been considering. This looks really nice. We've got some healthy margins. We've had a good rate of success versus the failure rate after prices come down to liquidity down here, for example. And I just think it's a really well-rounded trade idea. Now, let's take that right the way back to the start there. You can see that this is actually a really nice point for a breaker structure area in there. My idea for this one is for the market to come right back down into liquidity. It doesn't matter how far. The market could ultimately come down to 176.20, for example. Great if it comes further. Then what we want to do is set up a pending order at around, let's say, approximately 177. Target profit up at 177.68. Stop loss, we'll work that out. Probably be at around 176.70. So that's the kind of trading opportunity I'm looking at here at the moment in the EA. This is absolutely paramount. We must hit liquidity first. We want to be trading with commercial interest, not against it. Okay, so let's line up the trade. Entry, target, stop loss. I'm going to be happy with a stop loss at about there for a 1 to 2.8. I think that's a really nice, well-balanced trade. A 1 to 2.8 is an incredible risk-reward ratio, so I'm really happy with that. And so long as we hit liquidity down here and it has a good deep push into where the cash is, because this is where the money is, all and around this grey area here. This is the cash rich area in the EA. We're going to get that cash, and then we're going to charge upwards. Account for any potential little wick throughs, the break close retest that we may have. That's absolutely fine. I think we should be relatively well protected with a trade up to 1777. So that's next up on the list. Jack, you say, Jack says here, what do you mean by inflection point? So that's a great question, Jack. Do you mean just generically what is an inflection point, or did you mean that in a particular context to something that I've been talking about here? Excuse me. How you was... It's on Euro was. How I was explaining it on the Euro was. I'll tell you the truth, I can't remember which one we were talking about. We've got various points of inflection. So we have this area in here, which is a nice big point of inflection. This area and this area. So we have the 1, the 2, and the 3. So, and then of course we have great deals of it, down below. If you look at the daily time frame, this area in here, we can see that there's a multitude of points that could be considered as inflection points. Now, for me, when I'm explaining about inflection, I am explaining, first of all, let's talk about the science of it. Behind the scenes, it is when JP Morgan has $100 million shares or contracts or whatever they're trading, Euro or shorts, right? When they get down to this area here, it changes hands. So then that 100 million shorts turns into 150 million longs. So then what happens is we have the exchange period, which is where the orders go from one institution to another, or within that mix as well is going to be the profit-taking factor, the commercial profit-taking factor. They're going to be unloading their orders, taking their profits, and then buying into it. Okay, so we are selling, and then we are unloading and exchanging, and then buying. And this is where we get the nice big knee-jerk reactions from these areas in the market. And then once we can ascertain where these areas are, like this in the red circle here for a moment, then we can use that for future advantages and understand that there's probably going to be a similar thing that happens again and again and again. So in this case, in the Euro Oz here, for example, we have this area where we have this stage of coming down. We have a couple of dojis, which is the exchange. And then we have the big bar that moves in the opposite direction, which is where all of that money that was short is now turning long. And we have this repeatedly. So we have it here. We also have it here. Commercial shorts are turned into commercial longs. And we have it here. We have commercial shorts that turned into commercial longs. And we can repeat this pattern over and over again. And the point in which it inflects, the inflection point itself, in the simplest form, is the point in which you see this change. It is where you see a great deal of long orders turn to shorts, or shorts that turn to longs, and these big moves away from that area in the market. So it doesn't always have to happen on a daily time frame. Obviously, the daily is representative of a great deal of information, but you can find these, of course, as we do on a daily basis, on a 1-minute chart. You can find them all over the market, and we trade them all exactly the same. So back in the day when I used to trade it for HOT, I used to use very similar methodology like this, except we were on a desk, and there used to be a guy with a guy that used to have a sort of he used to use a megaphone. It was a bit ridiculous, bit crazy, but that, it worked. And he used to stand at the end, and he would shout. He would shout out about areas like this in the market, and he would follow tape. I'm not going to get into today what tape is and all stuff like that, but this used to happen, and then he used to be like, right, we've got 100,000 contracts turning into longs here. We got lots of money coming into the market in buy orders. Let's start buying. So then we all start buying, and and then we would see the market rally up like this, and our charts looked a little bit different. but it was very much the same practice being taking place behind the scenes. So that desk style methodology and an institutional style methodology is what we do on a daily basis right here, and it is the practice of trading points of inflection just like we do on a daily basis. So does that make sense? I'm really hoping it does, but it's fine if it doesn't. We can dig into it. Yeah. All right. Good man. Good man. So yeah, that's what we do. So looking at this then, this Euro Oz at the moment, we have got a really nice little trading opportunity in here. Beautiful risk reward ratio, very well balanced. The risk profile on this one is clean and clear. We don't have any major stuff that's going to be standing in its way. We're on Wednesday. We've got a good 72 hours left of the market trading week. Not quite 72 hours, probably about 64 at this stage. But it's good enough. We'll wait and see what happens. If we get caught in this one on Friday evening and we're trading, upwards of 177.48, we will be all right to leave it open over the weekend. If it's trading let's say sub 77.25, then it will probably be a get out early scenario, and we'll have to leave it there. So let's move on then. Next up, we've got the Aussie Yen. So the Aussie Yen, absolutely stunning trade. And unfortunately, we didn't get it. I love starting it out that way. But it was a really nice move, nevertheless. It was a really, really nice move. And the Aussie Yen's currently trading at 101.30, so it's had a bloody nice breakout as well. But unfortunately, we were almost waiting for the exact same setup as we were on the Euro Oz, or as we are on the Euro Oz. Looking at that initial bounce, expecting the market to come back down, bite into liquidity, and then get the takeoff. As you can see here, the market's come down. Obviously, nice little trading margin. Thought we'd managed to pick up on a few of the scraps here, but the market double bottomed down at 104.06. We got the breaker structure, and it had a very, very slow and gradual move up to the high. If you look at the differences in this move, in comparison to this move, very, very different trades. Very, very different trades. And this one had the big, nice, beautiful knee-jerk reaction, exchange. Okay, and this is, again, great education here, guys. Really good little lesson here. Look at the similarities between the 15-minute and the daily time frame that we were just looking at. We have the market comes down. We've got a lot of short orders coming into the market. We have the exchange process where the exchange takes place behind the scenes. Boom. Big knee-jerk reaction, big move away, big bars, all really, really nicely applied. And then we reach this area at around 7 p.m, obviously quieter trading times. And we get the overnight sort of period where we go into the Asia session and it gets really tired out. We do eventually obviously hit that target. But on this one, unfortunately, we did not have the bite into liquidity. And so what happens is we did get a little bit of a knee-jerk reaction, but it ends there. So rather than this one, which was just a really smooth run straight up to 172, we got a stagnant move. It took ages to get going. We had one big bar and then it died a death. And then it just stayed there. And that, ladies and gents, is because the market did not come back down to this area first all the way to pick up the orders. Because the money, the cash-rich area in the market with that money ready to go, is here, not there. And so we had that really slow move. But that being said, it was a winner. And so you got to take it in hand, because at the end of the day, sometimes it doesn't always play out like that. We are trading a living, breathing entity at the end of the day. So sometimes you're going to miss those opportunities. Now, looking at the Aussie Yen for a potential trading opportunity at this stage, guys, probably not going to happen. It is actually one of the reasons why I've decided to add a Euro Oz position instead, because I didn't want to have too much Australian dollar exposure. So we've got the Euro Oz in play now. The Aussie Yen never took place for us, so we can give that one a pass. So that one can get out of there. Now, Aussie CAD. With this as another trading opportunity from the market report as well. So everybody's already had access to this one. Unfortunately, it's not happening for us yet. We are currently trading up at the top of the 15-minute channel, which is interesting after what I was saying about it yesterday, funny enough. But it is still there at the moment. There is a little bit of a trading margin above at the top there, but I think it's a million miles away, not from a distance perspective, but in terms of the parameters it needs to meet in order to get there. I think it's a million miles away at the moment from that triggering. So unfortunately, there's nothing to be done about it. It's just going to sit in the market and wait. I'm definitely not going to get out of that order because I still like it. I still think it's got legs. But at this stage in time, yeah, this moment in time, it's not a goer. I can download that one. It is on the market report, so everybody here will have access to that one. But I'll just send it out as a reminder there. Right, let's dig into some precious metals then, team. So we've got gold. We had a long order in this one. Gold isn't really doing too much at the moment. We did get a double bottom down at my sort of liquidity point, breaker structure point down there. Very, very sluggish. Now, gold, without a shadow of a doubt, was waiting for this week's CPI. And now that the CPI is not taking place, it's got in a mood. So we're currently trading at 41.32. It's been ranging predominantly the entire day. We did have a nice little up and down, but it's a difficult one. I mean, in hindsight, yeah, it looks great. Definitely could have traded this. But the reality is you've actually got a big TRF situated directly in the middle, which means you'd have to be fighting either the top side or the bottom side to find those trading margins. So it's not as easy as it looks. The break of structure for this long as well, you have to think, is going to be about there, possibly. Yeah, so that's going to be your break of structure for a long, but the long break of structure is going to put you directly in the way of this point in price as well. So then you're not going to be able to take it with clean margins, path of least resistance, until 41.29. And it's just not worth it. Not worth messing around with it. Better things to be focusing on right now. So the long-term long anyway is up there. That's a 1 to 2.56. Still loving that trade idea. Still makes perfect sense. This again was a market report trade idea, so you all would have had access to this one at the beginning of the week, but I will send that out as a gentle reminder to those of you who maybe haven't got around to the report just yet. Moving on to silver. So this one currently underway. There's nothing I can do about this now. For those of you who had it in the pending list from yesterday, good job. It's currently underway. As you can see, we're about 50% of the way to target profit. It's done nothing but range all day since we got the nice breakout. Nothing to say about it. There's no commentary past that point. We're just going to see where it goes. You want to get confident when we break this level. When we break this level, I should expect it'll only be about half an hour to 45 minutes before it hits target. But until that time, we're still very much in the danger zone. So be aware. Moving on to energy markets, natural gas. I'm not going to spend too long banging on about this one because it's my favorite go-to at the moment, simply because of its size. The natural gas trading opportunity has been and still continues to be very, very good. It's a very lucrative investment. So far, we've stuck to our guns with weather climates and weather cycles. We've been watching the forecasts on a daily basis here at the UTC, monitoring the situation. It's going really, really well. Currently, we are about 13x our initial investment. No, 12.4. So yeah, we're 12.5x our initial investment so far. So really, really nice. And we are over, officially, the halfway point to our 1 to 20.36 return, which is going to be one hell of a payday when this one comes off. So very much looking forward to that. The CSL is at 3.6 still, and I think it would be prudent to now move this up, and I've been toying with the idea of 3.77, so that's going to be there. The reason for 3.77 is it's below a minor point of inflection here, a minor anchor point, and it's also significantly beneath a major anchor point, which is this one in here. It is also below the lows of this. Now, I'm giving this a really long room to breathe. A huge trading margin, it can come back down. And that's because of the nature of natural gas. I understand this asset very well, how it moves. It does get volatile. We do have significant bearish waves within bullish trends. And I just don't want to be knocked out of the trade for the sake of a price action pullback. So we are giving it a lot of room to breathe. But so far, so good on NG. Moving down to UK Brent, we have a running short at the moment. This was via a breaker structure trade following liquidity achievable. That was up there in 65.54. We're which is really nice. That happened yesterday at 5:15. We got a really nice break of structure on this one. Came down 9 o'clock this morning, triggered the trade, and we are currently plummeting towards our target profit. I would like to think, with the lack of demand at the moment, OPEC Plus is doing us a lot of favors at the moment, guys. Demand is down for oil. We have a huge oil surplus. So long as they keep printing those kinds of numbers, we're going to continue seeing Brent shorts. So I'm thinking that this is going to be pretty decent, at least for this trade idea. I really do. I don't think there's any kind of risk at the moment to this position. So we should be looking at a nice little return for a 1 to 2.62 there before the end of the week. Now, US indices. Let's have a look. So as Scotty D was saying yesterday, US 30 Dow Jones really took the limelight. It was the best of the three. And I think looking at the consolidated form here, he's absolutely right. I mean, this is a really stunning move from the Dow Jones, without a shadow of a doubt. A really stunning move. We've got a beautiful high up here at the moment. Great structure. We're currently trading inside that point of liquidity. Definitely not on top of it, which means we could potentially look at the sell-off as a result of the rejection from this high. Nadia, got to go early. Thanks, Max. Yeah, no problem at all, Nadia. Have a great afternoon. Yeah, take care. So I'm thinking of potential shorts in the Dow Jones today, not longs. And we are going against the grain a touch here. But, I mean, even on the daily time frame, look at this, guys. We're talking about all-time high territory here. Today was the day we formed a new all-time high, just by a smidge, but we did do it. We've had an incredible sizable move up here. Yesterday was an amazing bullish day for this trading asset. I'm thinking it's going to take a bit of a break now. So I'd be looking at that area in there, which is at the highs of these moves before we had the little bit of a downstroke. We've got a relatively decent break of structure point. It's not perfect, but it's good enough for us. So that's going to be about there. Let me just bring that down. So that's going to be about there. Now, it's quite deep into the move. You could go for something a little bit more aggressive. I mean, arguably, saying that, that point in there is actually a really nice break of structure. That's even cleaner than the one down here. So I think we are actually going to go for the more aggressive approach to this one today. There's no technical risk factors in here. That's good. We've got that area in there. That's fine. I can deal with that. So yeah, it's a really clean trading margin between these 2 points in time. So what we're going to do is load up a short. It's entry, target, and the stop loss for this one. I don't want to go for anything too crazy, but a 1 to 2.44 for this afternoon's breakout. I think that looks quite nice. I'm going to have a really sizable margin in the stop above the break of structure point. So this is the margin above from that grey box there to the top of the stop, which is quite good, quite big. And what I want to see is if we could, potentially get that inside the stop loss. And we basically can. So we've got 2 layers of security in there, 2 layers of defense. The whole thing looks pretty good. So I like that. If you want to go long the Dow Jones today, you have got no choice other than to wait for a break close retest and the continuation, which means you are going to be trading this one probably late into the day, which is never something we really want to do. We don't want to do that on a regular. We'll see how we go, but generally speaking, we don't want to be doing that. We want to be in and out of the market the first hour and a half of the session. That's where the magic happens. So the opportunity is there. I'm not going to post one out, but the opportunity is there. If we go to the NAS 100 and the S&P, we are going to have much more opportunity for longs than on the Dow Jones, which is currently trading at all-time highs. So it would be prudent to leave just the short bias on the Dow Jones and associate the Dow today with shorts and only shorts, and then look to have longs and only longs available on something like the NAS 100, for example. So let's say that this is going to be our break of structure point in here. It's a little bit of a margin away from where we're trading at the moment, but honestly, guys, this is not bad. That's not bad at all, especially the size of the move we had yesterday from the Dow. So what we could do, let's thin this up. Let's tidy this bit up here. We've got 1, 2, 3, 4. Really nice point there. And what we're going to go for is, I'm just curious what the margin would be to there. I mean, that's looking pretty tight, isn't it? Because that's going to be, hang on a minute, I need to unscrunch this and study the chart for a moment. Yeah, I don't really care about that one too much. That's not the size of this one down here. Nowhere near the size. It's more of an intraday point rather than the daily. So yeah, I'm going to give that one a pass today. Let's go and find something else on top of that area. Would probably be more suitable about there. Yeah, that's not bad. So then 1 minute time frame up there. Yeah, it looks like quite the distance now on a 1 minute chart, doesn't it? I'm thinking for the long on the NAS 100 between these points, something like that for a 1 to 2.77. So I like that for the long. What time are we at? 2:15. So the bell goes in about 15 minutes. Yeah, no, we can't do that one. Yeah, it is what it is. It is what it is. So that's going to be the long on the NAS 100 today. And let's just check the S&P 500 here for a moment, just for the sake of it. So we've got that point in there, and then we've got the all-time high. The margin's around there. I mean, this is the true margin, but it's very, very choppy. I think the S&P 500 probably come with some inherent risk, but you cannot deny the fact that the available margin for this one is better than the NAS 100 because it doesn't have the technical risk factors that the NAS 100 does. So I'd almost be more. Yeah, there's no shorting availability in either of these that I like today. Yeah, no, not really. No, it's just no. No, not in the headspace for shorting the US tech or the S&P today. The only short availability is going to be in the Dow Jones, so please make a point of that to remember that one. The S&P 500. Do you know what, guys? I don't think I'm going to bother with the NAS 100 at all today. So yeah, we're gonna ignore that, and we're going to focus on a Dow short, and we're also going to focus on a S&P 500 long, and the long is going to be via this area in here, and we're going to go for a 1 to 2.7 in that one. Yeah, and that's what we're going to do. So there we have it. Let me get those two out to you as well. S&P and the US 30 Dow Jones. There we go, ladies and gents. Okay, so let's do a quick recap then. We are pressing on today because we've only got 14 minutes to go for the bell ringing in the US session this afternoon. We've got opportunities short in the Dow Jones, long in the S&P 500. Obviously, natural gas and UK Brent already ongoing. We had the opportunity long in gold. We've already got the ongoing one in silver long at the moment. Aussie CAD short. Euro Oz long. Euro NZD long. Cable, we've got split opportunities on both sides of the market. You guys will want to get that one in soon because that looks like it's going to be triggering relatively quickly. And that's it, guys. So we've got a pretty well diversified portfolio at the moment. Our books are looking pretty balanced. Energies, metals, indices, and of course our FX market. So quite nice out there, quite balanced. We're a little bit exposed in Australian dollar, I suppose, but not heavily. It's only a couple of trades. We've got a couple of euros as well, and then we've got obviously pound against the dollar. That's fine. But yeah, I think all in all, things are pretty good. Things are looking pretty healthy. So are there any questions or anything before I go? It's coffee time at the UTC office. Got to get ready for our US Open this afternoon. Nope, all good. Cora Tim, all good. Scotty D, all good. Thanks, great as always, Jack. Yeah, no problem at all, Jack. The pleasure is mine as always, my friend. So I'm going to wrap things up there then, team. I hope you've enjoyed today's session as much as I have. It's been good. I think it's been pretty I think it's been pretty productive. I'd say that at the very least. Have a great day out there. Take care of yourselves in the US Open this afternoon. Don't go stressing too much. Don't go over risking, definitely. I will fire out the trading opportunities into the general chat in a moment as well so that you will have access to those. And let's see what we can do. So please take care of yourselves. Pleasure as always, guys. And I look forward to catching up with you in the next one. To those of you out there on YouTube as well, if you are not a member already, please don't hesitate. Jump in and come and join these sessions inside the trading community with the rest of us. Take care. Have a great day. And I'll see you later. Thanks a lot. Bye-bye.